everyone. This is Kathy. Can you see my screen? Let me just adjust everything here. Give me a second. All right. Good morning, everyone. This is Kathy. If you can see my screen, hear my voice, let me know either in the YouTube chat or if you're a BK member, in the BK chat. One second. Something is stuck on my chair. Okay. All right. Good morning, Obi-Wan, Cheryl, Miguel. Hello, everyone here. Hello, IR Trader, Mark, Fran, Stephen, Dor. Looks like everything is going perfectly. And that's great. I'd like to welcome all of you to our Caffeinated Buzz, the first one of September. So much to talk about today, especially since we have such a busy week ahead of us. And there's a lot I'm going to share with you. And, please be patient because I'm using some new technology today. So please make sure that, everything is going to be a little bit slow. Hold on. I'm just going to tell Boris. So anyway, I'm here. Boris is going to join us shortly. And so, as I said, this is a huge week in the markets. And, it is not only the beginning of the week, the beginning of the month, but, traders are finally back from their summer holidays. And, they're going to be looking at, putting on new positions, trying to make the rest of their money for the end of the year. So that's something that, I think everyone is very much, kind of zeroed in on. So you're looking at my heat map, and there's a difference between kind of front of the week and end of the week, and I'm going to talk through each of these with you, as we get into it. But in general, I think what we have is a lot of seasonal factors that will typically come into play in the month of September. Now, you may or may not know, September is traditionally, I'm going to share some charts with you, is traditionally one of the most volatile months in the market. I'd showed these different charts when we began August, and I think it's important to show them again. So if you'll bear with me 1 second, let me grab my chart for to show you what's going on in the markets. Let me see, where is it? What I want to show you is I want to show you how the equity markets tend to perform in the month of September. 1 second. I had it up a second ago, but let me see. I have it in my drive. So we'll just go to my drive. I have a number of September charts that I want to show with you. Okay, here's the first one. Okay. So this I'm going to share with you. Let me see if I can make this show up in my computer. So I'm going to share I'm going to stop the screen, and I'm going to share the window. Okay. So right now, I know it's very tiny, but I think it's what I want to share with you is very clear. Just take a look at this. The one glaring down candle. This is the S&P, how the S&P performed from 1928 to present. And there is only 1 month that is, net. It was basically a net average loss for the S&P. And guess what month that is? September. And it has a net average loss of 1.2% for the S&P. So it's definitely, a month where you want to be favoring those short stock trades and exercising caution with those long trades. And this carries over to the currency market, because what this also means is that you want to exercise caution with any long risk trades and lean more into the short risk trades. And that's why, for example, the sell-off in stock futures that we're seeing this morning, the sell-off in the yen crosses is consistent with the seasonal patterns that you typically see in the S&P. We also have, strong seasonality in gold, as you can see here. And gold, September is traditionally hands down the best month for gold. So you can see that, gold tends to perform very, very well. Now, this morning, gold prices are basically flat. And, it's a little hard to say because gold is at or pretty much close to its record highs. So the question is, how much more can it rise? And we'll take a look at that later when we look at the charts. But on a seasonal basis, you can see that August tends to be a good month for gold, and September tends to be an even better month for gold. So there's certainly scope for more gains in gold in the month of September. And all of this is consistent, in my opinion, with the sell-off in the equity market. Because if we have a sell-off in the equity market, you may see risk aversion flows move into gold as a result. And if we're looking at the charts here, and I think my screen will hopefully update. If not, I'll stop it. And then we'll just show it again. No big deal here. So right now, what you should be seeing is I'm going to share with you my charts, and we're just going to look quickly at the dollar index, and we'll go through more charts later, but looking quickly at the dollar index, and let's just remove the indicators, go to a daily chart, and you will see that the dollar index had, sold off aggressively in July and August, and now is finding a little bit of a bottom. Now, as we walk into September, the question is, do we keep on going up here, or do we keep on going and start reversing here? And that's where we start to talk about the fundamentals, right? So in a nutshell, this is a very important week in the sense that, or a very important month period, in the sense that we have 4 central banks that are expected to cut interest rates this month in September. The Federal Reserve, the European Central Bank, the Bank of Canada, and the Swiss National Bank. We'll talk more about the other ones as we go through this heat map. But, these are the 4 major central banks that are expected to cut interest rates. Of course, front and center is the Federal Reserve. So you can see in my heat map that overall I'm bearish dollars because the Federal Reserve is gearing up to lower interest rates. And the question is not, if they do it, but how big will the rate cut be, 25 or 50? Now, last week, towards the end of the week, we had a dollar rally because last Friday's data wasn't all that terrible. Personal income, personal spending, the PCE deflator wasn't as bad as everyone feared. So we had an end of week dollar rally. But let's remember, one of the most seminal events of August was basically the Jackson Hole Symposium. And with the Jackson Hole Symposium, Powell told us point blank that they've made enough progress on inflation. So they've made enough progress on inflation. So therefore, their primary goal is to make sure that that we don't have an aggressive cooling in the labor market. So that has led many people to believe that maybe 50 basis points could be the case. But, at the end of the day, it's all based upon data, which is why this week is so important. It's a shortened trading week. We don't start trading until today. So we have Tuesday, Thursday, Wednesday, Thursday, Friday. But we have a lot going on this week. Not so much today, but as the week progresses, we have ISM manufacturing, services, ADP, Challenger, and of course, non-farm payrolls. And that's what everyone's focusing on this week, non-farm payrolls. Boris and I are going to be trading non-farm payrolls with you on Friday. So make sure you join our Friday live stream. It's a huge event, and we're going to be live streaming it with you. Now, in terms of non-farm payrolls, many people fear that the labor market in the U.S. is weakening, right? So they fear that the labor market in the U.S. is weakening. And so with the labor market, but it may not be the case. Take a look at this. If we look at Friday, you can see here that non-farm payrolls is actually expected to grow from 114,000 to 165,000. And take a look at this. The unemployment rate is expected to drop from 4.3% to 4.2%. So the unemployment rate is expected to drop. the non-farm payrolls level is expected to grow. So this is actually not negative for the US dollar. In fact, if we do have non-farm payrolls actually rising at a faster pace, where we basically have the unemployment rate, we basically have the unemployment rate drop for the first time in 5 months, that could actually be bullish for the dollar. So as you see, we are kicking off this week. If you look at just my if you look at just my watch list on the right hand side of my trading view charts, you can see that the US dollar is kicking off this new week with strength. It's kicking off this new week with strength. And, part of the reason why it's kicking off this new week with strength could be, first of all, this certainly is because of risk aversion in the markets. And so we are seeing risk aversion in the markets leading to strength in the dollar. But September itself could also kick off with dollar gains. And the reason why September could kick off with dollar gains is because we may actually have stronger non-farm payrolls on Friday. And, part of the reason why non-farm payrolls are expected to grow at a faster pace was because if you click on this, you'll see we had an unusually large drop in July. And the reason why we had an unusually large drop in July was because of the summer storms. So for no reason other than the effect of the summer storms fading, we should, in essence, this is why the market thinks non-farm payrolls could rebound in the month of August. So even though the US dollar has sold off and the Federal Reserve is gearing up for its first interest rate cut, this week could actually end up being a slightly positive week for the dollar, especially on Friday if we get that NFP surprise. Now, of course, there's a big gap between 114,000 and 165,000. So it can go wrong at any point. We may have the improvement in the unemployment rate, but maybe non-farm payrolls may only rebound to 140, 150,000. We may have the average hourly growth slow, or we may have a revision to the previous month and no improvement to this month. So there's many different ways where it could go wrong, which is why with non-farm payrolls, it's always best to trade it reactively, which is what we're going to be doing with all of you on Friday. We're going to be trading non-farm payrolls reactively because, there's so many pieces of the puzzle that it's important to watch how the number comes out before actually guessing. But ahead of this, I do think we've already seen a bit of a dollar rally. I think we could continue to see a bit of a dollar rally. Now, of course, you've got to be selective. The dollar will probably not rally against the Japanese yen. You're looking at my dollar yen chart right now. And for all of you that are on the Twitter Spaces, make sure you click on the YouTube link below the Twitter Spaces so that you can see the charts that I'm looking at and all the charts that we're going to be looking at. So going back to the dollar, we may not see a dollar rally against the yen, but we should continue to see a dollar rally against the euro, for example. Euro peaked at the last week in August, and definitely has more scope for weakness as we head into this new trading week. And dollar CAD could extend its gains as well, and the reason for that is because the Bank of Canada is expected to cut interest rates again this week. So when you pick what you want to be buying the dollar against, you have to be selective because there's a lot of other factors at play. Like, for example, if stocks continue to sell off, that is going to make it very difficult for the dollar to rally against the Japanese yen. But it could be very easy for the dollar to rally or extend its gains against the euro, against the Canadian dollar, for example. Now, the other thing that I want to point out is that on a seasonal basis, we looked at how this tends to be a very good month for gold. And let me share my screen on that again. I'm going to share with you my screen. How this tends to be a very good month for gold, as you can see here. It tends to be a very challenging month for stocks, where, I don't know why my screen is not updating, but, I'm going to share it again. So yeah, it's very negative for stocks. So stocks could very well continue to sell off. And then we have currencies. You may wonder, what type of seasonality do we have in currencies in the month of September? And, unlike the equity markets where we tend to have, quite a bit of seasonality, if you take a look at this here, if you take a look at this, and I really have to figure out how to get it to actually show the window that I want. Actually, I'm just going to share my screen here. So if you take a look at this, you can see that September is a negative month for dollar yen, but August, it's no different from a lot of the other months where August and July also tend to be a negative month. So I wouldn't gather too much from this. And then here we have the euro dollar. Euro dollar September tends to be a net positive, whereas August tends to be a net negative. So we'll have to see. But from what I can tell from the forex charts, it's not like it's January or December or May for the euro dollar, where they're very clear seasonal patterns. It's not any different, in my opinion, than any of the other months, although it does seem like September tends to be one of the stronger months. The only way this could work this month is if the ECB cuts interest rates, and they are one of the 4 central banks expected to cut interest rates this year. If they cut interest rates and basically say, we're not going to do anymore. If they say that, then that's going to end up being positive for the currency. So, going back to the US dollar, my point is that we could see a dollar rally towards the end of the week, but the overall view that we have for the dollar remains bearish because the Federal Reserve is going to kick off a cycle of a series of interest rate cuts. And when the Federal Reserve meets, they're going to be releasing their dot plot. So it's going to be one of those very significant Federal Reserve meetings. And then on top of that, we have the first, this month, we have the first U.S. Presidential debate between Harris and Trump next week. So this week we have non-farm payrolls. Next week we have the debate. And then, U.S. CPI, I'm just trying to figure out what the release date for U.S. CPI is. I believe it's next week as well. The release date for US CPI is September 11th. So yes, it's next week. So next week we have the presidential debate on the 10th. We have the US CPI report on the 11th. And then we have the FOMC rate decision on the following week on the 18th. So the next 3 weeks is going to be huge for the markets. And so I remain bearish dollars, although this week I think that we could see a little bit of a scope of a dollar rally. I am neutral euros. We have nothing going on for Europe this week, or we have nothing going on in terms of data. We do have 3 regional elections in Germany, and in the month of September. And there's been a huge diversion between what's happening in Germany and what's happening in the rest of the region. The German economy has been suffering. The rest of the region has been, especially led by France, has been accelerating due to the impact of the Olympics. Now, of course, the Olympics is over now, so we're no longer going to have that support, but that boosted prices, that boosted activity, and has led the ECB to think that they may not be looking to they're not committing to more than 1 interest rate cut in September. We'll have to see, because that's that we're hearing a lot of mixed messages from ECB officials. But at least this week I'm neutral. I'm kind of bullish euros against some of the commodity currencies, against some currencies, but I'm bearish against the dollar. I'm bearish euros against the British pound. And the reason why I'm bearish euros against the British pound is because we talked about how there are 4 central banks who are expected to lower interest rates this month: the Federal Reserve, the ECB, the Bank of Canada, as well as the Swiss National Bank. What you'll notice is that the Bank of England is not on that list. The Bank of England is not expected to lower interest rates until maybe October or November. And a large reason for that is because the Bank of England is expected to, the Bank of England, the data has been very good. We have the Bank of England expected to postpone the interest rate cut until the following month because data has really been much better than a lot of other countries. So I'm still bullish pounds against the euro. Actually, euro pound is down, quite a bit. The only challenge with euro pound is that it's become deeply oversold. Euro pound has become deeply oversold, but on a fundamental basis, it could continue to move lower. I'm bullish Aussies. Now you hear my voice. I've got a little bit of caveat. And the reason why I'm bullish Aussies is because RBA is also one of the major central banks not expected to cut interest rates this month. And the main report we have from Australia this week is the GDP number. And the GDP number is expected to be stronger. That's the only big release we have from Australia. Also, we had the Caixin Manufacturing Index from China. That was also stronger as well. So for all of those reasons, I think that we could be in a position where we actually see Aussie rally, maybe not so much against the dollar, but certainly, I'm looking for outperformance. Now, when it comes to trading, you can see I have this fundamental heat map. Just because I have this fundamental heat map doesn't mean that I'm just going to arbitrarily buy Aussie and sell dollars. I'm going to wait for my technical setup to give me that confirmation. And when I have technical setup, I'm going to be looking at my heat map to see whether it coincides with the view. I mean, we'll look at technicals in a little bit, but that's how I fuse the fundamentals with technicals. So moving on to the Canadian dollar. This is a huge week for Canada. We said this is a huge week for the U.S. The two countries in focus is basically the U.S. and Canada. For all of you that are on the Twitter spaces, welcome to my Monday market, now Tuesday, usually market outlook. Please join us on the YouTube live stream. The link is below this Twitter post, so you can see my charts and everything we're showing you. So this is a huge week for Canada. Canada is expected to cut interest rates for the 3rd time in a row. They are also expected to release the jobs report. They are also expected to release the IV PMI report. So we have a lot going on for Canada this week. I am bearish the Canadian dollar because, data from Canada hasn't been that great. Also, we have, the BOC expected to cut interest rates and do more. Bank of Canada was one of the first central banks to cut interest rates, and more is expected to follow. So given that more is expected to follow, I think it's, pretty significant here to talk about how, dollar CAD had originally rallied significantly in the month of July, August, and then given back a little bit, but there's plenty of room to upside. If we just look on this move here, you can see with a fib retracement basis, first fib level is not far from here, 35.60, but beyond that, 36.35 would be the next fib retracement level. So there's a lot more room for dollar CAD to rally. And for those of you that in Twitter spaces, make sure you join our YouTube live stream because I'm showing charts there. Now, we have nothing going on for New Zealand. We had the New Zealand terms of trade. The numbers came out good, but, Kiwi is trading exclusively on the market's appetite for US dollars, as well as, how stocks are doing. So Kiwi is down quite a bit today because the stock market is selling off. With the Swiss franc, we had mixed Swiss data. We had they came out this morning. Swiss inflation data was weaker, quite weak, which is one of the reasons why the Swiss National Bank is expected to cut interest rates. And we have the GDP number growing at a faster pace. Now, yesterday we also had Swiss data with Swiss retail sales numbers and the PMIs. The PMIs and retail sales were better, but the inflation numbers was weaker. So while the Swiss National Bank is still expected to cut interest rates this month, I'm not sure they will do more beyond that. But we're neutral Swiss franc this week because it's, we're done with the Swiss data. And Swiss is absolutely going to trade on how the dollar trades and how risk appetite trades. And then we have the yen. We had the yen, if you notice from my watch list here, is up across the board. Now, part of that is obviously due to the sell-off in stocks. But a large part of that is also due to the comments that we had from BOJ Governor Ueda over the weekend or yesterday. He basically said that he basically reiterated his commitment to raising interest rates. He said that providing the economy evolves as expected, the central bank intends to lift rates further. And that is the main reason why the yen is up across the board and why the yen could continue to extend its slide across the board. So I do think we are going to see more strength in the Japanese yen, but once again, it's going to be purely trading on the market's risk appetite. Now, one of the things I want to show you here in September is that there's when we talk about the first interest rate cut from the Federal Reserve, this is a chart of the dollar and gold. Gold is obviously the yellow line, and the blue line is the Fed Funds Index. And each arrow here that I'm pointing to, and once again, for those of you that are on Twitter Spaces, you want to join me on YouTube, click on that link because I'm showing you some charts. When the Federal Reserve begins its first interest rate cut, which is what the arrows point to, if you look down here on the bottom, it usually coincides with a massive rally in gold. So gold has hit, a record high in August. But from a Fed interest rate cut perspective, as well as the perspective of this traditionally being a very, very positive month for gold, gold could, could resume its rise and could extend to new highs this month. Because on a seasonal basis, September tends to be a very, very good month for gold. So let's take a look at the data. We did have some data released over the weekend. We had Australian building permits, inventories, job ads. Most of those numbers were mostly better. The inflation index was not better, but it doesn't seem to matter much for Australia. Core dwelling prices are up. And then China's Kaishan manufacturing index improved. And then last night we had some more data, or yesterday when U.S. markets were closed. Swiss retail sales was stronger. The only data we had from the Eurozone this week was revisions to August PMIs, which are not market moving at all. And it confirmed that, manufacturing activity in Germany slowed, but manufacturing activity in Switzerland accelerated. And then in the Eurozone itself accelerated. New Zealand reported stronger terms of trade. Australia reported weaker current account. Honestly, none of this really matters. They're not huge market movers. Today, we have ISM manufacturing coming out later today from the U.S. And with the ISM manufacturing index, you can see that the market expects a stronger ISM manufacturing report, which, we'll have to see because we did have a stronger Empire State Survey, but we had a weaker Philly Fed index. And so, it is probably a little bit of a tough call here. We already walked through the inflation data and the GDP numbers from Switzerland. The inflation data is much more important because that's, kind of what's happening right now. Whereas Q2 is ended in June. So, it's much more backwards looking. But ISM manufacturing is the first piece of major U.S. data that we'll have today. So keep an eye out for that. That's going to be very, very important, especially the employment component of manufacturing ISM. And then tonight we have the Australian PMIs. The Australian PMIs numbers are also expected to be stronger all around, which should be good for Aussie. We have Australian GDP numbers. Sorry for that. I'm getting, I have someone outside my window right now blowing something. But Australian GDP numbers are also expected to be stronger. So PMIs are expected to be stronger. GDP numbers are expected to be stronger. So once again, scope for an Aussie rally. And then the Kaishan data from China is expected to be better as well. And then on Wednesday, we have, just give me a second for this to load. We have revisions to PMIs from the Eurozone, not a huge market mover. But we have CAD trade balance, not a huge market mover on a day when we have the Bank of Canada rate decision. The Bank of Canada, the third 25 basis point rate cut expected from the Bank of Canada. So, that's going to be but of course, it's not just what they do. It's what they say they're going to do next. So the Bank of Canada is expected to cut interest rates and then continue to cut after that. And so if they cut and they are dovish and they signal more to come, that's when we suspect to see more losses in the Canadian dollar. And I do expect that to happen. We have the Beige Book report from the Fed. And I think that's going to show the various Fed districts reporting more challenges in the U.S. economy. Anecdotally, there's a lot of reasons, a lot of retailers are warning. There's a lot of reasons to believe that the U.S. economy has continued to slow. We have the U.S. trade balance. That's not a huge market mover. We have the Australian trade data, which should be stronger as well because the PMIs were good. Factory orders from Germany and then Eurozone retail sales. France is definitely going to expect report a Olympic boost that is going to boost the overall Eurozone retail sales numbers. But on Thursday, the main focus will be jobless claims and ISM services. ISM services, for those of you that follow me for a while, I talk about how the employment component of ISM services is a huge leading indicator for non-farm payrolls. So we could have a stronger number. If we get a stronger number, that's going to support the case for an NFP rebound. And many of you are joining us late, and I talked about how non-farm payrolls are expected to rebound on Friday. We're going to skip ahead. We're going to take a look at how non-farm payrolls are expected to rebound from 114,000 to 165,000. And the unemployment rate is expected to drop from 4.3% to 4.2%. So the unemployment rate is expected to drop. The non-farm payrolls is expected to improve. Why? Is it because the labor market is really running on all cylinders and really doing as well as everyone thinks at the Fed, or everyone suspects it is or not? I don't know. But the main reason why non-farm payrolls are expected to rebound is because of the summer storms. The summer storms caused an unusually large drop, as you see in this image here, in non-farm payrolls in July. So for no reason other than activity resuming, non-farm payrolls are expected to rebound in August. And if the unemployment rate drops, this would be the first drop in the unemployment rate in 5 months. So that would be a pretty big deal on that perspective there. So this is why there could be an end of week rally in the dollar. And, Boris and I will be live trading this with you on Friday. So definitely tune in. It's a big day. And join us on the YouTube live stream. We're going to be posting the link later on this week. But Friday is not just about the dollar. Of course, dollar will be front and center, but we also have Eurozone Q3 GDP numbers. That's going to be very important. We also have Canadian jobs numbers. Now, Canada reported job losses in June and July, which is another reason why BOC is expected to cut interest rates this week. But is expected to rebound, but may not rebound enough, or the unemployment rate is expected to increase, and full-time jobs could drop quite significantly. So it could go wrong in a lot of different ways. And also the IV PMI report is due for release, and that is also expected to be weaker. So a lot of reasons to think that the CAD jobs report could end up being weaker. So, there's a lot of weakness expected in the data. Now, going to the charts, Boris is going to pop in and he's going to join us for talking about the stock market as well as, gold. But taking a look at the charts with the euro, as I said, kind of rolled over in last week. It rolled over, pulled back. And right now we've got this kind of, it's not quite a reverse, it's not quite a hammer candle. But, we've got a long wick potential reversal right at the 20 SMA. I think in the near term, we've got risk aversion. So we could see resumed weakness in the euro. But, as we get closer to non-farm payrolls, we could end up seeing, different moves. But I do think we should see a bit more weakness in the euro, especially since we could see a little bit of dollar positive data towards the end of the week. Pound dollar, on the other hand, has been far more resilient. Now, pound, it's below the 5 SMA. It's rolling over. On a technical basis, it also looks like it's going to move lower, but on a relative basis, it should move lower by a smaller degree than some of the other major currencies. Dollar yen, we had the hawkish comments from BOJ Governor Ueda. We have risk aversion. We have, the possibility of ongoing risk aversion in September. So while I'm bullish dollars against euro, I am cautious about buying dollars against the yen. I actually think there could be more downside on this move. Dollar Swiss, same story. Looks like we're still below most of the major moving averages, but we'll have to see. We're going to, kind of assess things as they go. Aussie dollar does look like it's going to roll over, but be wary of this because we have a lot of good Aussie data expected this week. So this is where the technicals and the fundamentals come into play. I'm going to show you this in a second. And then Kiwi dollar also rolling over. I'm more bearish Kiwi than Aussie. So if we're going to find a trade to take to go long dollars against euro, long dollars against Kiwi, long dollars against the Canadian dollar could be a nice trade, especially since we are not quite yet at resistance in the Canadian dollar. 135.60, 136.35 are the main resistance levels in Kiwi dollar. Now, as you all may know, I use my ZIP strategy quite a bit to look for trades. And we, had a fantastic month for ZIP in the month of August. We I'm going to show you something real quick, and then we'll look at the chart in a second. I'm just going to show you what I shared on our YouTube, on our Discord for our members. And you can see, August, last week we made 121 pips, and August, 347 pips. We basically haven't had a losing month since May. So ZIP has performed very, very well. And it's all about slow and steady profits. 100 pips a week is my target, fusing fundamentals with technicals. Now, why am I showing you the ZIP chart right now? It's to tell you, look what's happening. First of all, the background is red. When the background is red, that means the longer term trend for the euro dollar is bearish. When the euro is trading below the indicator line, it means that the shorter term trend is bearish. The white candles are the ZIP sell signals. So you have ZIP sell signal here, and you have a ZIP sell signal here. The reason why I'm showing you this chart is, what is euro dollar doing? Euro is attempting to rise above the indicator line. So when I see this happening, in no way, shape, or form should I be selling euros. I want to be selling euros when it's coming from above the indicator line, and from above the line going back below the line. So this kind of tells me that, euro is showing that it's actually showing strength, not weakness. So if I'm looking to sell euros, I don't want to be doing that now. Dollar CAD also rolling over. But it is in the buy zone. So if we do see some stabilization in dollar CAD and it starts to point upwards, that's still okay because we're still well above the indicator line. Dollar yen, we're below the indicator line. So this is still a good short trade. In fact, dollar yen still very much looks like a good short trade. The background is green, hasn't turned red yet, but it's below the indicator line and looks like it will continue to move lower. So ideally, I do want to see it turn red and for it to be below the indicator line. That would be a much more powerful signal to sell the euro dollar. Now, we did have a ZIP sell signal in gold earlier this morning. And so that trade still very much remains tacked in for the near term and still signals potential weakness in gold. So this is how we kind of fuse the fundamental ideas with the technical setup, and tells me when to avoid a trade like this one, or to consider a trade like this one, or like this one. So, this one I want to see some strength before we get into it, but this is what I look at. Boris, do you want to come in and take a look at gold more deeply and talk about, what you see in the charts? I think Boris is going to roll into live trading as well. His usual, live trading session on Tuesdays. Boris, you want to go ahead? Hello.
I can't add.
You're on. We see.
Are you guys? I don't see myself on the
We see you.
Oh, there we are. Okay, sorry. I've added myself on. Okay.
So Boris is going to be joining us for live trading and showing you how, we live trade. Boris, you're no longer sharing your image, your face, or your screen. There you go. There you are.
I am having issues.
I'm going to stop sharing screen.
Am I on, guys? I'm sorry, guys. I'm having some issues. For some reason, my computer... Hold on. My computer is just freezing for some reason. It's not letting me come on. I'm having... Hi, guys. Okay, let me just... Don't do anything. Let me make sure that you guys... Okay, but I'm frozen on my end here for some reason. On my computer, I'm just kind of frozen here. I need to understand why. I'm getting an I have to log in, log out.
Okay, so while Boris kind of logs in and logs back out, why don't you guys share with us? What are you trading? I'm going to answer some questions here. So lots of people are trading gold, and I talked a lot about, first off, July. I wish it was July and it was beginning of summer rather than the end of summer. September is a very, very positive month for gold. On a seasonal basis, September is a great month for gold. We also talked about how, Fed interest rate cuts are really good for gold. And so, while we are seeing a little bit of a pullback in gold right now, and gold is in my zip sell zone, what this tells me is that, look at the gold charts. I may have some opportunity to sell gold on the short side, but if we zip long, meaning that we're above the indicator line and the background turns green, those positions for me are going to be bigger. I'm going to overload those positions versus the positions in, and I'm going to share my screen one second, versus those positions versus the short positions. Let me share my screen, because I know those of you have some more charts you want to look at. Okay, so the next one is Aussie dollar. We looked at Aussie dollar. We could look at Kiwi CAD. Kiwi CAD is also rolling over, but remember, this is a huge week for the Bank of Canada, and we've got a long wick. It's all going to be determined by what the Bank of Canada does and says. So I do think that there's more upside than downside for Kiwi CAD. Aussie yen selling off because now Aussie yen, we have a lot of good Australian data. We can't ignore the technicals though. It's rejected the 200-day SMA. And if we take a look at our near-term fibs in Aussie yen, you can see that the rejection happens right at a significant fib level. These fibs matter. And so it happens right at 99.75. The real support doesn't come into 97.50, which is 75 pips away. So I do think that risk off flows could have a bigger drag on the move than what you see here. So, that is definitely something to pay attention to. I'll let Boris talk about oil. I don't see any other
did you answer the Aussie yen question? Why
I did already, yes.
Okay.
Okay, so Boris, do you want to share your screen? I see your screen showing only the StreamYard screen now.
It looks like I'm finally
your screen is only sharing the StreamYard screens. So maybe you want to move your screen.
No, I'm gonna move off. Yeah, I'm gonna move off the screen. I just wanted to make sure. But hang on. Right now, we're seeing your screen, Kate. So we haven't.
I've stopped sharing. You have to go ahead and share.
Okay. Let me share my screen. Just 1 second. I'm sorry, guys.
Given that we have an election this year, we have a down September. Well, I mean, we have the debates. I mean, there's a lot going on. As I said, we have non-farm payrolls this week. We have the inflation report and the first presidential debate between Harris and Trump next week. Then we have FOMC. And September, so there's a lot of uncertainty. And September is already the only month in the year that's a net average loss. So for all of those reasons, there's a very, very good chance that that markets are going to sell off in September. And so from a tactical perspective, I would be, if you got a long position on, I'd be in and out quickly on those long trades. I wouldn't let them run. If you got a short trade on, or short setup setting up, I would lean more into those short trades and then maybe have a bigger position versus a long trade this month. That's how you kind of take all this consideration and all this information into consideration.
Okay, so hi guys. I got all my technicals, I guess, everything up right now. I'm just posting right now. Should come up in just 1 second, hopefully.
It's up.
The data for September, which a lot of people, we talked a lot about September being a negative month, but I actually have the data for you. So one of the more interesting things, and by the way, while everybody is sort of thinking, I'm actually curious, we have a poll going on as to whether you think September will be a negative, positive month. Right now it's running 70% yes, 30% no. Feel free to vote. I'd love to see your opinion on whether you think September will be a positive or negative month. So a couple of really interesting data points that a lot of people on Twitter have pointed out. First of all, you have to understand the last 3 years, September was -5, -10, -5. So 23 was -5, 22 was -10, 21 was -5. That's already bad news in my opinion, because it means that basically, it's already a very turbulent month. But then people said to me, oh, election year is different. Maybe you should take a look at the election years. So what I'm showing you right now is data for the election years in September. And yes, on balance, election years are net positive. But here's what I want you to take a look at. Since 1996, and I'm a huge believer that the only data that matters is the most recent data, okay? It doesn't matter what happened in 1964. Nobody cares about Lyndon Johnson and Barry Goldwater elections. The country is completely different then than it was now. What's important is how has the country been reacting over the last couple of election cycles? And I don't think it's good news. You look at the numbers. 8 was 9.6, 12 was a relatively decent year, but even in 16 and 20, which were 20 was a pretty bad year because of COVID. 16 was actually a relatively decent year. Still was basically mildly negative. So the preponderance of evidence kind of suggested, yes, September is going to be a negative month for equities. Add to that, my friend Barry Ritholtz just posted. Let me just go over that. Let me go to my profile and just share this with you because I just retweeted this. Two things that people posted. Number one, Barry just posted that all of the risk assets, the treasuries, gold, at iTraxx crossover have all been lower, like 10 out of 11, 8 out of 10. So it's not that it's impossible to imagine September soaring. It's just like it's a 20% bet. It's an 80% bet that September it's going to be very likely negative. But here's the thing that really, really caught my eye. Charlie Bilello, who's another really good market analyst, just posted this little data gem for everybody. And by the way, feel free to follow me if you're not at FX Flow. Let me just put it let me put my this is my handle. Follow me, and this is Kathy's handle. In case, I am assuming you all follow Kathy, but if you do not, you need to follow her. So both of us obviously very active on Twitter. So you feel free to follow us. But here's a really interesting data point, which worries the F out of me, frankly, which is household allocation to stocks is at the highest level since 1952. It's above 45%. We are super leveraged to stocks. Now, why does this worry me? This worries me because of something called the wealth effect. If the majority of the wealth or a significant portion of American wealth is coming from equity appreciation, right? And you think about this, it's the boomers and sort of the late Gen X's, late age millennials that have the most of that wealth. It's completely within reason. It's not even like a remote possibility. It's almost a given that you get a 25 to 35% correction. So all of a sudden, you're 1/3 poorer in your assets. Now, I understand, you're not poor until you sell your assets. Who cares? It doesn't matter. You feel poorer. If you feel 1/3 poorer, that is a massive, massive, massive hit to the economy, in my opinion. So that really, all of this stuff concerns me. Seasonality, everything going on. And then add to all of this, guys, Kate touched on this. Yes, we have data set this week. We have ISM manufacturing. We have ISM services coming up. We have obviously the non-farm payrolls. which is all, highly volatile. But then next week on the 18th of September, check out this little volatility vortex. 18th of September, we have the Fed meeting, right? We have the potential of candidate President Donald Trump being sent to jail because that's his sentencing date. And then we have the VIX we have all the option expiration at the same. So the whole day, like just literally the one day. So we could be looking at like a massive maelstrom of volatility into the whole thing. So Scott is saying there's plenty of bullish news for oil, and it could not rally. We could dollar Mideast tension.
Is it just me, or is some of you experiencing a little bit of delay?
Fails.
Is it just me? Hey guys,
lower.
Is it just me,
Great
or do
point,
you?
Scott. So,
or is Boris breaking up?
I think honestly, frankly, oil going higher is
Boris
a disaster,
seems to be breaking up a
because
bit, right?
Does everybody hear me, by the way, okay? Or am I breaking up? I just want to make sure that you guys hear me. Definitely a delay. I'm lagging. So, Kate, take the screen. I'm going to try to change. To a different network. Try to change to a different Wi-Fi network, and then re-log in. See if
but now
the
you're
connection
okay.
is better. Okay.
Now you're okay, though, Boris.
I don't know what's good. Well, it could just be this network lag, because the only thing I can think of is this network lagging. Although I'm on the fastest network, but
okay,
this seems to be. I'm having some sort. Honestly, I don't know whether it's the fact that it's weird because when I'm broadcasting by myself, we have no bandwidth issues whatsoever. But for some reason, like today, when I'm seeing myself frozen right now. On the screens. So
okay, well, what I'm going to do is, I think you're coming back fine. I'm going to drop off so you can continue talking.
Okay. All right, it's better now. We'll try to do the best. I'm going to try and close some windows, guys. Maybe I have too many windows open. I'm just trying to keep I'm trying to keep like everybody's questions now. Okay, so we'll try to do the best we can. Anyways, my point is oil, as you guys were talking about it. Oil is absolutely a concern if it goes high. Oil going lower, Scott is pointing out, is actually a sign of a recession. The fact that we can't rally oil, in the midst of us, one step away from bombing Iran, and Russia constantly, tormenting Ukraine, and Ukraine blowing up every one of Russia's oil depots. The fact that we cannot go higher is a real sign that, one, obviously, U.S. supply is quite good, but also just the fact that there isn't that kind of heavy demand. And that's also a function of manufacturing. Manufacturing has been down significantly. So to me, all of those things are early stages of declines, right? And I think that's in many ways, Scott, like lower oil is the one saving grace of non-inflationary pressures. But the fact that it can't go higher is, I think, also very much a sign of lower demand. I mean, that's really the key here. My argument has been for the past month or so is that demand has died. We're just not aware of it yet. And the market is still in this mindset of like, oh, we're going to have double-digit earnings growth, when every retailer is warning, saying, from Lululemon to Dollar General is saying nobody's spending money the way they used to. People are still buying vacations. People are still flying like there's no tomorrow. People are still, doing crazy services spend. But when you stop spending on products, that's the first sign that consumers getting tight. So those are just sort of my general macro ideas. You guys wanted to see levels in equities, right? So let's take a look at levels in equities. I'm going to go to my chart here. Let's go to NAS on a big, let's say one day 1-day basis. And I'm going to show you where I think. So I've been arguing. I've been saying I think this whole 20 to 21 that in my opinion, this is a classic double top formation. This is the daily chart, right? So if let me find my arrow. Top. Let's look at this. Top. Sell off. Right. Weak rally, lower. Lower rally, right? And potential, in my opinion, for like maybe a little bit higher rally, but potential for a double top and a big decline. I think that's how everything is shaping up on equities. So, this 20,000 in NASDAQ, 5,600 to 5,700 in the S&P. Those are considerable resistance levels. And this whole 41,000 in the Dow. Like if we go to the Dow, Dow is did break modestly to fresh highs, modestly. And this is the key thing here. Unless we go to 42,000, I'm really not a believer that this is a true breakout. So similar pattern. The weakest pattern of all is within the NASDAQ. So we're here. We're kind of like right at the tops. If this starts to roll over, this is going to just set probably the continuous double top formation. Head and shoulders is talking about and everything else. Okay, so before I go on with anything else, let's just do a tech check. Give me a tech check. Tell me, hey, are you seeing me okay? Number two, you hear me okay? Are the charts good? Is everything kind of fast and responsive? Because what we're going to do today is something very unique and unusual. We're going to try and do maybe a little bit more of this with you guys. Is we're going to roll straight into live trading. So today, we're going to take Kathy's. So everything is good. So let's just make sure that everything is good. Everything is all good. Yeah, I think, guys, honestly, I think it was the double stream. For some reason, my computer just could not handle a double stream on this thing. We have to. I'll have to figure out what's going on here with Kate for the future. But I'm glad I picked up the bandwidth now, because I'm on the fastest bandwidth, so everything looks really good, and I see myself pouncing around, and you guys are all seeing. So, are you guys ready to rock and roll with me? Are we ready to talk trading? Is everybody want to give me some live trading? Give me some yeses. Tell me you want to hear this, or you guys want to any more macro that you want to discuss. Let's kind of wrap that up, and let me know how you guys doing. You guys ready to trade? Just say trade or macro. Why is oil dropping? So I just went through the whole explanation of why oil is dropping, because I think global demand is far weaker than we think. That's the whole point. There's a lot of supply. We're still pumping out tons of supply on oil, and there just is. China is just not buying. You gotta understand that China is a massive driver of global trade, and China is dead. So I'm not a bull here. I'm just not a bull. I could be 100% wrong, but I'm just not a bull on all of these big rallies in the market. Doesn't matter, because I'm going to tell you how we trade, which could care less about whether my long-term opinion is true or not. So I'm going to get into our discussion of trading and everything else. Let me just say bye to Kay, and thank her for for the thing. Let me just tell her, okay, I'm going to live trade now. Okay, so we're good to go, right? Let's get into go from the one day chart to back to our 1 minute chart, and let me show you both of the charts. Okay, so we're gonna look at the S&P, and then for you guys, this is, just to let you know, what you're looking at is my proprietary indicator called the 1 bar scalp that we use all the time in my room, right? all the time in my room. Sorry, I'm just looking at comments here. And if you want it, here's a link to join us. I'm going to give you a discount. And if you want a really big discount, if you really want a big discount, right, then join me for 3 months on this coaching discount, which is past the Prop Academy. So I'll put those links in there. And of course, as always, use our friends at Apex. Oh, what's going on over here? My mouse is just a little. Here we go. Just 1 second. Wow, I'm really lagging on my. Okay, my computer is just lagging for some reason. It's having big memory leaks. I don't know what's going on with my Mac here. I think maybe I stressed it out too much. Okay, so let's talk about trading and strategy. I'm just going to adjust the indicators so you guys can see them a little bit better. I'm going to explain the strategy to you, and then we'll see if we can do a couple of trades here with you guys. So we're going to do this. Was it 9? It's 9:47, right? So cool. All right. There's nothing. We're not going to do any trades till 10 o'clock because news is coming. We have 10 o'clock news coming up, so I might as well just simply chill out and wait for that. Let me just adjust this a little bit more. I want to go 7, 8, so you guys can see the M's. So these are the M's, and on this one, let's adjust it down to 1. This is the S&P. Okay. All right. Cool. All right. I'm going to kill some. Just bear with me a sec, guys. I'm just going to kill some. I think I have 2. I think Chrome is just such a frigging data hog. Oh my God. It's such a massive data hog that probably that's what was killing me. I had so many Chromes open. All right. We're ready to go? Yes, the Labor Day sale is for Apex right over here. Hang on a second. Oh, I didn't post it. Here's the Apex data. Here's the Labor Day sale. This is, by the way, a ridiculous deal. The Apex sale, they're giving you $50 for a $250,000 account. I have 2 of them. Oh, I closed it out. Let me open up. Let's go to TradeVate. I'm going to open up my trading accounts. I open up 2 $250,000 accounts just on Friday, I think. Give me a second. I'm going to log into my TradeVate and trading them already. Trading. I'm going to explain to you the whole strategy, what we're doing here. Okay, so we're coming up, blah 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 blah. Good. Okay, so this is my short TradeX account, which I opened up. This is my long TradeX account. So 250. I'm just mildly up on my long one. I'm up about 1,000. No, 37. I'm up about $1,500. Yeah, $1,500. I didn't even know this. $1,500 on my long account, and I'm going to explain to you exactly what I do. And you are by no means have to follow me exactly the way I do, but if you use my indicator, you can use it in 100 different ways as a variation. Now, what I do is I scalp and I trade continuity. Kathy trades continuity on a 1-hour chart, right? There's basically only 2 trades you can ever make in trading. You can bet that whatever trade you're making is going to continue in a direction. So you're buying something that is rising because you're betting on the fact that it's going to continue rising, right? That's continuity. Or you're selling something that is rising because you're betting on the fact that it's going to turn. That's mean reversion. There's literally only 2 trades ever that anybody makes. Every single strategy, from the fastest HFT to the longest fundamental strategy, depends on basically those 2 prisms. And a strategy is nothing more than just a prism through which to view price action. There's no strategy that works all the time, ever. So every strategy fails. It's just a matter of degree of failure, and it's a matter of your ability to avoid as much of the negative aspects of failure as possible, right? So let's just understand that. Does everybody understand that there's literally nothing going on. Yes, ISM data coming up 10 o'clock. So we're not trading. And it's a good time. We have like 9 minutes for me to explain my strategy to you. I'm going to explain to you exactly how I trade. So I trade like a pigeon. There is a great scalper in the original Market Wizards. His name is Scott Weinstein, who literally had very few losers ever in his life. Like, he was just an amazing scalper. Now, he actually traded, by the way, ironically enough, he traded the exact opposite of my way. He traded mean reversion. He waited for exhaustion in the market and would go the other way. Or, if the market was oversold, he'd be a buyer. If the market was overbought, he'd be a seller. But the principle of what he did is he used to call it, I trade like a pigeon. And a pigeon is someone, if you ever watch the city streets, if you ever watch pigeons, eat food, they will hunt and peck for the tiniest morsel and then fly away, right? Fly away, right? Have you ever tried, this is a horrible thing to say, but, have you ever tried to run over a pigeon with a car? I mean, not try, but, by accident, maybe, drove fast and seen pigeons. You can never do it. Pigeons always escape. One of the reasons they always escape is because they're never greedy. They just hunt and peck and they fly away. They're like always at the last second, they just fly away. You ever seen that in the city? Who's a city person here? Confirm to me that you've seen pigeons go back and forth. Give it to me in the comments. Tell me you've seen the pigeons do this. So my principle, and this is strictly because of my own personality. And again, the key to making this your own type of trading is, what kind of personality are you? Are you a greedy mofo or are you a scared mofo? So I always trade scared. I'm not afraid to admit it. That's just me. I'm always concerned about blowing up, much more than going for the jugular and squeezing the most amount of money out of the profit. You have to know who you are personality-wise, because one thing I'll tell you is you're never going to change your personality. If you love to just squeeze the life out of, and go for the jugular, and you like if you're a person who's going to, compete hard and just pummel whatever it is that you do as a project, you probably, much more on the greed side. Pigeons distrust the status quo, right? Very good. And so if you're greedy, I'm going to show you a different way of trading this. But if you're scared, if you trade sort of like me, like a pigeon, you will notice a really interesting thing. What I'm doing here in these particular signals is, the red signals are the sell signals. So this is a momentum sell. The green signals are momentum buy. I clearly, we're in the sell mode right now. This is a momentum buy. Now, we're going to just focus on NASDAQ, just to take one instrument, for simplicity's sake. Let me just adjust this a little bit so you guys can actually see this a little bit cleaner. And again, you guys want the indicator, you're welcome to obviously join us. I gave you the special discount. The indicator becomes yours the moment you join, and you can trade with it. You get the signals. So like right now, I'm not going to trade this because it's 9:54, though I'm very tempted to trade it, but I'm going to wait for the news. What I would be doing with this NASDAQ trade is, anytime I get a red M, I'm going to go to my short account, which is this one. I have two accounts. This is another cool thing that I'm doing. I trade long trades in only one side, short trades only another side. There's two reasons I do this. Number one, sometimes the market just flips around from a long to a short, and I could be caught on two sides of the market, right? So I want to be able to participate on both sides of the market. That's one important thing. Number two, because usually one side of the market is going to be dominant. You're going to be winning all your short trades and possibly losing a lot of your long trades, or the flip side, you may be winning all your long trades and losing all your short trades, right? And the beautiful thing about Apex and any kind of prop trading is you can shove your shit trades to the shit side, okay? Like, if you're trading your own account, you had your own money at stake, you'd be burning your bad, your money on the bad side while making some money on the good side. I don't care that I'm burning it. I don't care that I'm burning a $50 account. Okay. First of all, I'm going to try never to burn it down to margin call because I'm trading very small. But even if I margin call on the short side and I get funded on the long side, what do I care? I'm at $250,000 funded for basically $100 buy-in, right? I could do that for $1,000 buy-in and like do 10 of these things and still be way ahead in terms of getting funded. And then of course my strategy is the exact same thing on the funded side. I already have like 3 funded. I'm going to have a 4th funded on the 25,000, and then I'm going to try and do. We're going to try and get 2 funded and $250,000, and then in September we're going to try to trade the funded. This is such an interesting approach, and everybody who kind of runs it with me in PTP and my coaching, regardless of how they trade, whether they trade long, large size, small size, bigger holds, smaller holds, using 2 accounts, one for the short, one for the long, simply because Apex is so ridiculously cheap. I mean, it is beyond ridiculously cheap. Like here, let me give you the link again. This is an unbelievably good deal. This is a $500 account that they're giving away for $50. So load up. Do me a favor. You would then have both the mental, the financial, and the tactical flexibility to trade the way you want. So what I would do in my trading, if we go back over here, is I'm short the M. I'm short the red M, the negative momentum, and my risk reward is horrendous. I'll be the first one to admit it. And I probably will adjust it as we go forward. But for right now, there's a method to my madness. I'm trading 5 target, 20 stop. So 1 to 4 risk reward. And what you will see is that because I'm trading such short targets, because my whole point is momentum exists. Momentum exists sometimes for very, very big moves, sometimes for very, very small moves. And I want to capture almost every single move. In order for me to capture the whole move of the momentum, I have to go for the smallest possible, because sometimes I can only get 5 points. Sometimes it goes for 50 points. If I'm trading, highly frequent trades at small size, and what I'm trading, I'm just trading 1 contract, $100 trades, like basically every 5 minutes. So $100, $100, $100, $100, $400 in about half an hour. That's how I make, $1,000 a day. I need $15,000 to get funded. It's a very smooth path towards getting funded. Maybe 10 days, maybe 15 days, depending on how I trade. I'm in no rush, and I'm never in a position where I'm going to get blown out on the account, right? If I'm trading 1 contract, it's $100 risk, $400, it's $100 reward, $400 risk. I have $6,000 worth of stop losses against me. That's my stop out margin on a $250,000 account. So I'm nowhere near close to getting burnt. Now, do I occasionally sell the bottom, and do I get stuffed on the bottom? Yeah, occasionally I do. What do you do in that case? There's 2 possibilities, depending on time of day and how you feel about something, and whether how much of a risk you want to assume. And I'll go through both scenarios to you, and I honestly can't tell you. It becomes a matter of experience and feel of what you want to do next. The simplest way to manage is just to eat it. Okay, I lose 4. The idea is I'm trading for 2 or 3 hours. I'm probably going to have 20 trades. If I'm doing a good job, 1 out of 20 eats it. So I'm getting 19 positives. 1 negative, which is -4 against +19, even 2 negatives, which is -8 against +18. I'm okay. That's probably the simplest, easiest way. If you are a little bit of a greedy, stubborn bastard, which sometimes I can be, there is a very aggressive remedy that you may want to do. And I do this a couple of times. And even though the remedy is aggressive, it's still not like the worst thing that happens is you're not going to die, but you will feel the sting. And the aggressive remedy that I do is, let's say, I'm just giving you an example. Let's imagine I sold the bottom. Let's say I sold 41 and it just doesn't go down, right? It actually goes back up. I have a 20-point stop and it goes up to 61, right? It goes up to 61. Actually, in this case, this would have been the case, right? So let's say I sold 42. It goes back up to 62, right? I literally have my finger on a trigger. If I get stopped out, I reverse the whole position. My idea is if I'm getting stopped out minus 20 on a momentum trade, it's going the other way, at least 5 points. So I buy four times the other way. I flip my position. If I'm right, everything is back to even. I basically washed away my losses, and I'm sort of, the whole cycle here, this 10-minute cycle. I'm back to even. I'm continuing. All of this P&L stays on my books, and I'm just back at zero P&L. Maybe slight loss on P&L because of commission, but nothing big. So I'm flipping it around, and in this case, it would have totally worked. So just to walk you through, I'm short 42s. It goes up to 62, right? Comes back up, right? I'm long. Let me make sure that I'm not. Oh no, actually I'm wrong. Am I wrong on this? Let me see. I'm short. No, I'm short 52. I'm sorry. I'm short 52. That's it. No, I'm absolutely right. I'm short 52s. I would get stopped out at 72, right? Which is right over here. Oh, and here's the 10 o'clock news. So it came, the news came out. I would have been wrong on this position. This is a good example of why I never do this in front of news. So I would have flipped myself to long fours and gotten stopped out. Now, if that happens, say the worst case scenario, I flip myself over, I get stopped out. My terminal hit is minus 10 losses. So if I had 10 winners for the last 2 hours, I would have erased all my P&L. It's still, in terms of dollar sizes, it's I'll take it back. It's 20 losses. It's a $2,000 loss. So I have a $6,000 limit. It's a $2,000 loss. It's a big hit, but it's not, it's not the end of the world. And remember, it's only one side of the market. It's only my short account or my long account that gets hurt. The other account continues to make money. So if you want to do that, it's a very, very risky proposition. The much better proposition is you get stopped out, just eat it. Eat the loss, work your way back out to profits, and keep it that way. And as a matter of fact, I think I'm probably gonna, when I trade with you guys, sometimes when I trade by myself, I like to reverse and flip. But I think with you guys, just to make sure that nobody does anything stupid, we're going to just eat the losses, as far as it goes. Now, what's going on right now is we have news and lots of volatility, right? And generally, what I want to do is whenever I have news, obviously 10 minutes before the news, 5 minutes after the news, we're going to just let it go. There's no trades here because it's all bullshit. It's all market trying to figure out, what's the direction. I don't even know what the news was. Let's see how the market printed. Let's go back to Financial Juice. What do we print? We printed slightly negative, nothing horrible. We printed 47.2 against 47.5. Prices paid were higher. Construction spending is lower. It's not great news, guys. This is what I'm trying to tell you. Not great news for the market. I think we go lower, but it doesn't matter what I think. Well, we got a negative signal right now. We have a negative signal right now, right? Got 29 seconds left. I'm going to wait. I obviously have to wait for the signal to actually be real. In order for the signal to be real, the candle has to complete itself. So right now, I'm going to go back to my trade of 8. We're going to wait, and we're going to just simply sell this market if it stays red. So 6, 7 seconds, 5 seconds, 4 seconds. I'm selling in market here, and I'm just looking for a 5-point trade. 5-point trade in NASDAQ to see if I can make that 5 points to the downside. I sold a little bit early, and I'm probably going to eat my first trade not working. Still a little bit too early to trade post market. I got a little bit too carried away. So lots of volatility here, and I ate the 20 loss. What was this? This was a close at 37, 31. I executed myself a little bit too early. So now we're going to be patient and just simply wait for the next signal and let that signal, work itself out. Because I'm pretty sure that now that we kind of like 5 minutes after the news, momentum signals are going to give us some P&Ls. John, I don't understand your question. If you lose 2 trades, you have to make 5 to go into profit. No, I'm trading. Remember, I'm trading. 520, and obviously look at the volatility here today. This was just if you close this 37, high was 53. My problem was I just did a too early an execution. I should have gone. If I had waited here, I would have been able to survive the stop and made the target. This was not a bad signal. It was just bad execution, which sometimes I'm guilty of. What you want to do is you want to wait until the candle completely, totally completes. There's 0 seconds on the clock, and then you want to go short or long on the trade. So right now, I'm just going to be very, very patient on the signals, and wait for this thing to give me another signal, either momentum to the upside or momentum to the downside. Now, momentum, by the way, this is the 8-period moving average, and the idea is that sell signals below are going to be short, sell signals or buy signals above are going to be long. Why the 8-period moving average? Because it's as good as any to give you idea of directionality of the market. If the market is going to be going down, it's going to be mostly encapsulated by 8. To the downside, if it's going to go up, it's going to be mostly encapsulated by 8 to the upside. It's all, none of it matters. You can use VWAP, you can use 10-period. It doesn't matter what arbitrary number you want to use. The key thing is to stay consistent to how you view price action. Sorry, are we not trading continuity at same time with reversals? I'm not sure. I'm not sure you understand it. We're trading, the M trades are all continuity trades. They're momentum trades, right? So I'm just, we can't trade reversals. We can't trade this indicator has a second component to it where we can trade reversals. That's a more advanced strategy, and there's lots of people new who are on the board. I don't want to overwhelm people with too much information. I want to if you can hit a forehand properly, you're already 90% of your way towards being a good tennis player. So I'd rather have you learn how to trade one key setup, which is the momentum setup, really, really well. And then, if you guys want more advanced stuff, you obviously can join us in our coaching group, and I can show you more advanced techniques. But on YouTube, I don't want to confuse people with too many setups, because there's a lot of people who are new who don't quite understand how markets work. And I just want them to focus on the idea that momentum is the key driver of trade in the markets. Definitely much bigger driver of trade than anything else. So I'm just waiting now. I'm waiting patiently. This is generally a good time. I'm going to hang with you guys. I really would love to hang with you guys till about 11. I have to see if Kay will let me go. Let me just text her out. Okay, I'm just telling her that I want to hang out with you guys for like an hour to get the good signals here in trade. So we're down 1.5%. Now it comes a time. This is sort of an interesting time. All the news is out. Do we have any impetus here to turn the market? I think it's going to be weak pops at best. And I may be wrong, but I think the market, turning to the upside above the 8-period SMA is going to be weak at best. So we have a potential long momentum trade setting up. 52 seconds left on this one. If this candle stays green, we'll go long this trade on the long side, but it's got to stay green. So we'll go to my TradeAvate account. We'll go to my long count. Here's my long count, 37s. Here's my long count. Now, it's 33 seconds left in the trade, not even close to giving us a long signal. This candle has to turn green in order for us to trade. And remember, the error that I made execution-wise was I did not let the candle complete. I'm going to let this candle complete. I want all the seconds to be ticked off. Then I'm just going to come in market and let it play out. Let's see if we can get the long trade. 10 seconds left, 9 seconds left. And this is a very problematic candle. It's not absolutely clear at all that it's a long candle. 0 seconds left, no trade. red candle, we'll let it go. And this is a way we stay out of trouble, and just wait, wait for the setups to occur. Now you can see, we're kind of slowing down to the downside for right now, right? They kind of sold everything off. This whole 330, 320 level, kind of holding bid, not really going down any further. So we have to see if the sellers have any more juice to try to sell it further, or if the buyers now finally, find a modicum of a bottom for the near term. So, we'll see how it goes. Am I scalping without looking at volume? Hell yes, I'm scalping without looking at volume. Why would I look at volume? Explain to me why I would look at volume. Do I get paid on volume? Let me ask you a different question. If there was 10,000 volume and the price went down while I was getting long, and if there was one volume but the price went up when I was getting long, what's a better trade? Do I get paid on volume? Does it matter if there's 10,000 people that bought and raised the price up, or if there's one guy that decided to buy it and raise up? Who pays for volume? Do you get paid on volume, or do you get paid on price? Volume is in my opinion, one of the stupidest things that people can look at. It means nothing. Volume basically tells you after the fact, oh my God, price went really, really down, and there was a huge amount of volume on that price. Wow, great. It confirms the obvious. It's volume is like, wow, there's a whole bunch of rain and there were clouds in the sky. Clouds are the volume. Yeah, great. Tell me something I don't know. It's not an indicator. I only care about price. As I told you, I get paid on price. I follow price. I trade price. Everything else is absolutely a waste of time, in my opinion, in terms of, it's all just a whole bunch of excuses to make you hesitate in trading. At least, when I'm scalping, scalping, you snooze, you lose, right? So I try to keep myself very clean and clear in my directional abilities. Okay, getting M's over here, 24 seconds. Let's go to a trade of 8 now. So red candle, lows of the day. We're hitting lows of the day. 15, 14 seconds. Oh, by the way, I'm back in New York City, so sirens are back on the menu. There we go. It's not a trade unless we have New York City. What the hell is that? That's an ambulance. Okay, sell market, and we're done. I'm done. See, $100 faster than you can say New York siren is in the background. This is what I mean about trading price. Now, could I have made 50 points? Maybe. That's not what I do, and I'm happy to show you a longer way of trading. We're gonna trade with. I'm gonna trade with you guys tomorrow, Wednesday, maybe Thursday. I may take Thursday off because we're coming back Friday hardcore. So this week, if you please tell all your friends, please tell everybody you know to come join us. It's all free all the time, and I'm going to try and trade for like 2 hours. I'm finally convince Kay to leave me the fuck alone and let me trade 9 to 11. So I'm hoping that we're going to try to trade 9 to 11 every day this week, where you're really going to see like lots and lots of these setups happening. I want you to see me doing this 4 or 5 times during the trading session, so that you guys can get the idea of just how you could just P&L. My job is to P&L the way a pigeon eats. Eat. Small bites adds up to a big meal in the end. So okay, now we're just chilling, waiting for the next signal. I want to just trade Nasdaq with you. I didn't want to sort of change your focus to multi instruments, but just to let you guys know, there was the exact same signal on S&P. S&P is actually one of my favorite signals. Nasdaq is great, and everybody loves to trade Nasdaq, so I'm gonna trade it with you. But S&P is actually my go-to butter. I love this one. I trade this all the time. So if you look at over here, I'm going to be trading, M to the downside, 1 point target. It's very, very reasonable to make 1 point target in the S&P almost all the time. 1 point to 4 point, 1 point to 4 point all the time. So I could have done the S&Ps with you guys too, but we're going to just focus on NASDAQ because I don't want to diffuse your focus for the time being. So longer term time frames. So longer term time frames is simply you changing the stop and target parameters. It's the same prism, different approach. Okay, nothing changes in terms of the prism. The prism is the same. We want continuity with the trend. The difference is you say to yourself, number one, I'm not going to go for these short, tight trades. I'm going to go for longer trades that are not going to be nearly as accurate as the trades that Boris is doing, but they're going to be much more meaningful in terms of P&L. So if you're a person that wants to trade larger size, and I'll give you a couple of levels that you can consider. Now I'm trading 520, right? That's obviously a huge negative skew, and you don't want to be trading that. I think a reasonable equal skew, so it's a 50-50 bet and you're hoping to be 60% right, is what's a reasonable trend slice? A trend slice, in my opinion, a trend slice is like how long does the price get contained by a trend move, right? There's always a couple of trend moves during the day. And what is the general length of the trend? This is a very, very long trend move. This is a very, I'm on the S&P. Let me go to NASDAQ because we're talking about NASDAQ. This is a very, very long trend move. This is like a 500, this is a 200-point move. That's a very unusually long trend slice of 200-point move. I think a much more reasonable trend slice. A trend slice is how long can NASDAQ continue in the direction of momentum? It's probably between 40 and 50 points. So if you want to convert my indicator into a longer term signal, you say, okay, the first time it goes, and let's trade this two ways. Long trade, again, two accounts, long account, short account, right? First of all, I mean, you can take a cue of how are we on the day. We are like negative on the day, right? Negative on the day. So maybe your bias is going to be more negative than positive. But let's say you don't have a bias. You get long over here, 77, with a 40-point target, 40-point stop, 1-to-1, right? And I think it goes to maybe you're like at 35 points over here to the long side, right? Once you get to like plus 30, I would absolutely move my stop to break even. So at the very worst, this is, I don't lose any money. Generally, I would probably, if I'm 40 target, 40 stop at plus 10, at plus 30, I would move it to plus 10. So at least, I can lock in. But so now the long side doesn't work. Now I get to the short side and I'm trading 40 to the other side. Now I'm doing the same thing here. I'm plus 40. Now I just wait patiently. Now I go over here long. I get stopped out on this one on the long side. This one makes money, right? This one makes money, right? Now I may take this long side. This is again, I'm trading as a longer term trader. I have an M signal over here. By the way, how much time is it? 20 seconds. We have a. Let's trade this. Let me just focus on this, and then I'll show you. So again, I'm waiting for this candle to close. This is my long account. No, shit. This is not my long account. Fuck. This is my long account. Oh no. Sorry, I got mixed up. It doesn't matter. It doesn't whether long or short. Doesn't matter. Long or short. Great. Done. I'm done. But you are holding a 40 stop, 40 target. You're going to see if you can milk this thing for 40 points, right? You're not trading like me for every, for a nice little clip. You're trading for a larger move. Will it work? Maybe. But it doesn't work. Doesn't matter. It's a 1-to-1 risk reward. You just simply wait for the next setup. You're just looking for these quality trend slices. You're looking for these quality trend slices. You capture 2 or 3 of those net positive, right? Net positive to the day. So you 2 or 3 net positive trend slices during the highest trending time, which is this is the trending time. Between 9 and 11 is going to be the highest trending time. The next highest trending time is going to be 1300 New York or 1330 New York, 1:30 p.m. New York to about 1500 New York to about 3 p.m. New York, right? you capture 1 or 2 of those trend slices net positive. So, you're trading 10 trades, 6 of them are winners, 4 of them are losers. You're now net positive 80 points, right? 40 points at $20 is, what the fuck is that? That's $800. That's $1,600, right? You've done a lot less work than I have. And you're up big. You do that 5, 6, 7 days in a row, you're funded. And you're trading very, very conservatively. Does that make sense to everybody? What account should you use? Great question. I recommend everybody use Trade of 8. It is far simpler. It doesn't. I'm on a Mac, right? If you're trading Rhythmic, it's on a PC. It is, if you're, let me put it to you this way: if you're an engineer, you love to program, you like precision, you like 5,000, Windows DLLs in your system, and you want to, create all sorts of customizable stuff, be my guest. Rhythmic is fine. I've had 2 accounts that are funded in Rhythmic, or in NinjaTrader. Sorry, in NinjaTrader, not Rhythmic. I don't even touch Rhythmic. It's like just NinjaTrader. But literally everybody in my room is trading Trade of 8. The world in retail is moving to a web-based product. This is super fast. You see how fast it executes. I don't have to do a damn thing. You see how fast it clips my numbers, right? I'm in, I'm out. I don't have to. There's no delays. It's instant execution. It's well done. I have my DOM ladders. I can do whatever I want. I don't need. I need simplicity. If you want your life to be simple, fast, clean, and profitable, Trade of 8 by far. Okay, does that make sense? All right, let's look for more ideas. All right, no setups right now. But if you're in that 40 target rate, look, it's working for you, right? You're doing it, baby. You're doing it. It might hit you. You might have an $800 trade over here. I took my $100 trade. I'm fine with it. A man's got to know what he's looking for. But that's how you take my ideas and make them your own, right? And there's 1,000 places in between. And also, obviously, we're just looking at NASDAQ. You can do the same thing with Dow. You can do the same thing with S&P. It all depends on, what your preference is, what your instrument is, how you want to construct this instrument. The basic idea is you want to trade in the direction of the trend at the point of momentum, right? Buyers are coming in at the beginning of a trend. This is the beginning of a trend. I want to capture this trend slice. Maybe it will be a big move. Maybe it'll fail, right? But there's clearly 4 or 5 times during key points of the day when it's a big move. And if I have the patience and the personality to capture those big moves, I'm there. Is that clear to everybody? Give me some yeses, guys. Make me happy that everybody is understanding what I'm doing here. Okay. All right. I have no response from the Queen, so I don't know if I have to leave you guys at 10:30 or we can hang till about 11. I'll let you guys know. Tomorrow I'm definitely going to try and hang with you till 11. So another possible momentum trade setting up if this candle is green, and we'll see. We'll see if it goes. All right. Now you know what I need to do. I actually took the and the thing is also, don't fret. Some excuse me. This is my long account, right? I took my. Oh no. Yeah, I took a long trade in my short account. Okay, don't worry about it. The key thing is you simply disperse the trades into 2 accounts. Sometimes I'll make the mistake of doing that, but the key thing is you want one side of the market to be in that one account. Oh, we got this is like 8-9 seconds left, so I should be getting myself ready. And again, I want this candle to complete. Okay. target? 38. It doesn't look like it's going to work for me today. I'm at 33 right here. Now, okay, here's the thing that I will do, and it actually would have hit my target. If this trade is longer than 2 minutes, right? The whole point of momentum is it's got to go, right? If it's longer than 2 minutes and I have half a profit versus full profit, I'll take it. I'll take it because I don't, I'm going to be looking for more and more trades, right? I don't need to, like in my own personal trading, I would have had to now flip this over to the downside and try to even out this trade. I don't need the aggravation. So remember, I'm going to be doing, when I'm trading for like 3 hours, I'm probably going to be doing 20 winners, during that time frame, especially if I'm doing two or three instruments at a time. So if I don't see my profit within the first minute, my first thought is, okay, let me just get the hell out of either flat or just mildly profitable. So I took this one as mildly profitable, and it's fine, But let's play act this thing. What would I have done if it wasn't mildly profitable, right? It was 30. We came in at 33. It dropped to, I think it would have, let me just make sure that I came in. Yeah, 33. I would have been stopped out at 13. If I was stopped out at 13, right, I probably would have reversed myself on this trade. I probably would have reversed myself on this trade and see if I could get down to like 9, which I actually, well, let's see if it goes down to 9. And just simply washed away the trade, or at very minimum, yeah, and it does break down, right? So I would have literally flipped myself the other way. Now you got to have a little bit of balls to do this, but think about this: the worst case scenario, if you get stuffed, it's one side of the accounts that gets stuffed, and it's still plenty of room in terms of margining out. You have I think it's not even 6,000. I think it's 6,500. Is that what I have? Let me make sure that, what does Apex give me as a margin on a 250? What are the rules on 250? Yeah, 6,500. So if I'm down 2,000, I literally have 2 more of those stupid trades again, like 2 more blowout trades, and I still haven't gotten blown out. So I could, I do this all the time. I'll flip myself around the other way, but you have to have the balls down. It's 6,500 is the drawdown, Stephen, right? Not 6K, it's 6,500. That's what it says on the website. But that's a repair strategy. The key thing is, how do you make the win strategy? Now remember that if I'm trading NASDAQ from like 9 o'clock till before the news, till about 9:50, right? If you look at this, I am 100, 100, 100, 100, 100. That's 500, right? 9:50 to 10:05, we basically stop. Then it's 600, 700, 800, right? I'm pretty much done. I don't 800 for the day. I'm kind of done, and I've started at like 9:30. I'm kind of done by 10:30, right? So the other thing about kind of trading this is you don't need to do this for like 20 hours in a day. You can easily just do it for an hour, bank the 1,000, bank the 800, start the next day, and just you simply just give yourself then 10 to 15 days, and you're funded. And this way you control risk very, very easily under all sorts of adverse conditions. trading is always a combination of using your setup, not being too greedy, and knowing when to walk from the table, right? I mean, literally, the reason why everybody loses is because we stay at the table too long, right? It doesn't matter how good your strategy is, the stakes will, the market will turn, right? So you wanted to walk away from the table at a reasonable time. This, by the way, would have been a great, I definitely would have, let me see if we're going to, hang on a second. We got 23 seconds. We're going to go to the short side. Let's see if we can do one more trade here. Where's my thing? My short account is 37. Okay. So again, we're back to session lows, right? Back to session lows. Really, really dropping hard. 5, 6, 7 seconds. Now let's see if we can go down. Okay. Again, it touched my target, didn't quite do it. Now it obviously does it. Doesn't matter. I took what I could, but you guys see the idea. The momentum absolutely works. I just like the reason I got a little nervous is because this was session lows, and a lot of times off a big candle like this, it'll tend to just retrace on me. I didn't want it to retrace on me, but it definitely continued. It definitely hit the target. So. You see, when I'm the key thing about execution is when I'm waiting for the candle to complete totally. Generally, we've had like 4 or 5 trade. I think about $500 worth of winnings so far today, and obviously it's a very limited run of trading. You get the idea. You get the idea of how I add together all these winning trades very, very quickly and add to my P&L. Yes, Steven is saying to me that 6,500 is even better. You guys got the idea, right? You see what I'm doing. Oh, okay. Okay, is telling me I gotta go. Okay, 2 minutes. Hang on a second. 2 minutes. All right, guys. I'm sorry. The boss's lady is calling me. I hope you guys get the idea. We're gonna do the same thing tomorrow. Watch for the thing. Please invite all your friends. I really want everybody to come in and learn this. This is the easiest, simplest way to learn how to scalp in the market with very clean, clear directives. Once you start doing it, you learn, and then once you start hitting that forehand, you're going to start hitting passing shots like Roger Federer. So hope to see you guys tomorrow. Please bring all your friends. I'm going to post the tomorrow's link in just a little bit. Thank you so much. We had a pretty good session, but about $500 to the upside on sort of very topsy-turvy market today. Tomorrow, I think will be even better. I'll see everybody then. Enjoy. Everybody have a great day. Bye-bye.